Welcome back to Retirement Coffee Talk with Sharice Rivers at Zinnia Wealth. Online, you can find us at zinniawealth.com, ZINNIA wealth.com. All right, it is a natural thing to want to do, and that is get rid of as much debt as you possibly can before you go into retirement. So where does it usually come from where you get that money? Well, of course, your 401k, because it's now the biggest you've ever seen it. Now, the question is, should you pay off all that debt before you retire? Sometimes a good psychological move might not be a good financial move. So,
totally.
All right. So talk to me about that. Do people they just want to get rid of all their debt and then go into retirement? And some of that might not be such a great idea.
They do. And I actually encourage it. But there is good debt and there is bad debt. So the bad debt is, let's make sure we pay off our credit cards, our car payments, and those types of things. I call that kind of bad debt. But is paying off your mortgage a bad debt? I think that can be a good debt, especially if you're itemizing on your taxes. You're not taking standard deductions. Maybe that makes sense not to pay off. So I know there's this sleep at night better kind of thinking. It's a psychological thing. So if it's psychological, I'm not going to argue with you, but it's about dollars and cents and how to make it work. I don't want you to take $200,000 or $300,000 from a 401k, pay the taxes on it to pay off this mortgage. Or if you have to sell stock and now be tax on capital gains to sell the mortgage off, if your mortgage is, 3 or 4%, because you could take those dollars that you were going to do to pay that good debt off and make potentially 4, 5, 6%. So cash flow arbitrage is definitely a key indicator. But I got to tell you about a client who came in. They're a client of mine. They're not retired, and they weren't retiring for another year and a half. And she called me and she said, Sharice, I am so stressed out. I'm like, why are you stressed out? Well, my hours have been cut back from work. I wanted to pay off this mortgage before I retired, and I'm not making as much, and I just don't know. I feel like I should retire now, but I'm just so fearful because our plan was to retire in a year and a half. So I had her come in. I was like, honestly, you could retire now. And I said, you do not have to pay off this mortgage. She has about, 12 years left on the mortgage. So she's paid most of the interest already. And it was a low interest. I'm like, I wouldn't worry about that. We actually put that into your income plan. You can pay that down slowly. And she's like, well, where am I going to get my checks from? Because I know you give out checks. I'm like, well, you're going to get a $16,000 dividend from Duke. And then you have this real estate investment that's going to give you $21,000. And then we have this other interest bearing account that's going to bring you some income. And then she came in already with 2 annuities. Somebody sold her 2 annuities with incomes on them. And so we're going to turn those on. I said, when I turn all those on, that's going to cover all the income that you're making at work now and much more. And she went, oh yeah, that's right. Okay, I can do all those things. Like, yes, you can do all those things. And then your retirement account that's still at your 401k with $500,000, we don't actually ever really have to touch. We can let that grow, and split that into a couple of different investment strategies. So this young lady who is 67 years old was so stressed out because she thought she had to pay off her mortgage, and she was trying to chunk it down. She had 12 years left to pay it off. She's just trying to make all this income to chunk it down. And then she was cut back on her hours. And I was like, listen, we don't need to stress out about this. I said, we made a plan that if it doesn't get chunked down in time, that you still pay it off over the years. We do it slower since it's a low interest. And she went, oh my gosh, I'm so glad. It's been months and I've been worried about this. And I tell you that story because I can only imagine how many of you out there are feeling the same way. But because we built her an income plan and she saw it once, she stressed out about it. She had to see it again when she came in and just realized, okay, I don't have to worry about paying off. I can manage this. I can leave work. I'm not even getting the paycheck I'm getting anyways and be done with it. So she's officially retired. And so she's just like, I'm going to the holidays and I feel great. And now I trust that I don't really have to worry about this mortgage because it's built into the plan. And, she's just somebody's not going to run out of money. She's never even going to probably touch this other account she has unless she says, I really want to spend more on travel. And then we just pull, 20, 30 grand from that account over time and it'll still grow. So again, the income plan, the written plan, the strategy, the leverage, the withdrawal strategy, figuring out your spending plan, all these things are key to your survival of the mental side in retirement. So don't trade the stress of work for the stress of retirement. Have a plan before you turn in those keys and make sure you're sure.
Yeah, I totally understand the whole idea of wanting to be debt free. There's nothing better than when you make your final car payment or something like that.
Yes.
But, I mean, I look at it this way. You know why I understand you people? Because I'm one of you. I'm 65 years old, okay? I have exactly the same thoughts you do because I'm looking at that Social Security story and I say, oh, they're going to cut me back by 20%. And I looked at that, that's $1,000. Well, if I could get rid of my mortgage, that just evens that right out. And this is how you think, and this is how I think. And when we think these thoughts, it's time to talk to Charisse.
Yeah. And also, I'm going to need to talk to all of you because you're all thinking, if you're retiring soon, who's going to be Charisse's new host?
Don't worry about that.
I am stressed out, you guys. I need a planner for that one.
Thanks for listening to the Retirement Coffee Talk podcast. If you have questions or would like to begin the process of building a tailored retirement plan, call Zinnia Wealth at 833-368-3680 or find us online at zinniawealth.com.
Investment advisory services offered through Zinnia Wealth Advisory, LLC, a registered investment advisor. The firm only conducts business in states where it is properly registered or is excluded from registration requirements. Registration is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. Insurance products are offered through Zinnia Wealth Management, LLC, Florida license L078655, and Charisse Rivers, Florida license P037744. Zinnia Wealth Advisory, LLC, and Zinnia Wealth Management, LLC are affiliated entities. The information presented is believed to be current. It should not be viewed as personalized investment advice. All expressions of opinion reflect the judgment of the presenter on the date of the podcast and are subject to change. The information presented is not an offer to buy or sell or a solicitation of any offer to buy or sell any of the securities discussed. You should consult with a professional advisor before implementing any of the strategies discussed. Any legal or tax information provided in this podcast is general in nature. Always consult an attorney or tax professional regarding your specific legal or tax situation. Any client experience discussed on this show are unique to that client. Annuity and life insurance guarantees are subject to the claims paying ability of the issuing insurance company. If you withdraw money from or surrender your contract within a certain time after investing, the insurance company may assess a surrender charge. Withdrawals may be subject to tax penalties and income taxes. Persons selling annuities or other insurance products receive compensation for these transactions. These commissions are separate and distinct from fees charged for advisory services. Insurance products also contain additional fees and expenses. Social Security rules and regulations are subject to change at any time. Always consult with your local Social Security office before acting upon any information provided herein. References to specific investments should not be construed as being past specific recommendations. The returns for various indices discussed in this podcast do not represent the performance of the firm or any of its advisory clients. Returns do not reflect the impact that advisory fees will have on an investment. Past performance may not be indicative of future results. All investment strategies have potential for profit or loss. Different types of investments involve higher and lower levels of risk. There is no guarantee that a specific investment strategy will be suitable or profitable for an investor's portfolio. Historical performance returns for investment indexes and or categories usually do not deduct transaction and or custodial charges or advisory fees, which would decrease historical performance results. There are no guarantees that a portfolio will match or outperform a specific benchmark. Investments in fixed income products are subject to liquidity risk, market risk, index rate risk, credit risk, inflation risk, purchasing power risk, and taxation risk. Because bond prices fluctuate continually, their yields change constantly.